Rangebound day of trade with the Nifty moving in a 100-point band. Pharma stocks gained while banks come under pressure. Broader markets outperformed with the small cap index rallying close to 1%.
Shipbuilding stocks see recovery after yesterday's fall in a CNBC-TV18 exclusive. Mazagon Docks management tells CNBC-TV18 the company's order book is around 40,000 crores with another 27,000 crores of potential submarine orders likely to be awarded over the next few months. The company adds that Q1 margins of 27% may not be sustainable, with full-year margins likely to be around 12%.
A merger of all cement businesses under one listed entity, Adani Cement, would be an ideal way forward. That's the word coming in from Ambuja Cement CFO Vinod Baheti in an exclusive conversation with CNBC TV18. The management says pricing is expected to pick up post-September, and Ambuja will look to increase its market share from 14 to 20% as it looks at more acquisitions at the right price.
PNB Housing Finance gains close to 8% after nearly 5% of the company's equity changes hands in a block trade. Saya DLM sees 14.5% of its equity traded in a large trade worth around 883 crores. Parent company Cyient is believed to have sold a part of its stake in the deal.
Tax efficiency determines which financial instruments are most attractive. Dinesh Khara, SBI chairman, tells CNBC TV18 in his exclusive exit interview. His parting advice: bankers will always have to balance margins, asset quality and growth.
Hello and welcome to Halftime Report. I'm Ekta Batra and with me is Mangalam Malu. Well, it is a quiet day in today's trading session. It's largely range-bound, you'd have to say, but the bank Nifty is under pressure, so it's been flitting between red and green this entire week, to be honest. Separately, we have pharmaceuticals and healthcare stocks which are bucking the trend today. Dr. Reddy's, for example, is at a fresh 52-week high, so that stock is doing well. Glenmark is at the best levels that we've seen in a year, and stocks with a good amount of turnover because of news and because of a buzz around it is the likes of Mazagon Docks, Angel One, Ola Electric. So all of these stocks continue to garner attention. Separately, it's a quiet day for the indices. Hi, Mangalam.
Hi, Ekta. Quiet day for the indices, but a couple of sectors doing extremely well. The consumption sector really stands out today, both staples and discretionary. So, case in point, something like Titan, it's moved to the high point of trade. Remember, gold prices are at record high, telling you about the demand, underlying demand as well. And with the duty being cut, Titan as a stock has rallied a goodish bit from the lows as well. Off the 52-week low, the Titan stock is up nearly 17%, and that is the rally that started on the budget day itself. We also have HUL, which has done extremely well. Alongside that, we have Page Industries and Bata, which is picking up pace, along with Jubilant Foodworks. So consumption, consumer, discretionary, all these are picking pace ahead of the festive season and the more important third quarter as well. But let's talk about this space in further detail. We have Raymond, the first management on the show, joining in from, to discuss their post-first quarter earnings as well as discuss the demand and business outlook as well. Amit Agarwal joins us from the sidelines of the Motilal Oswal Global Conference, the investor conference that is underway. Thanks a lot, Amit, for joining in. Always a pleasure speaking with you. There are two ways to look at Raymond now that we're looking at it. One is obviously the textile business. The second part is the real estate business. Increasingly, the real estate getting a lot more dominant when it comes to headlines. On both those fronts, what are your targets for this year and the next, if you could give us a sense of aspiration?
Yeah, thank you for having me on your show. Obviously, if you see that we have announced the various corporate actions which enabled the demerger of the lifestyle business, which is gotten probably listed in the next 2 to 3 weeks. And we will have a pure play net debt free lifestyle business, which is again very, very attractive. And very clearly, you see the first quarter is always a weaker quarter, seasonally weak. And this time more so because of the weddings, no number of weddings, as well as you had very significant heat and the election impact. But we, from our dealer channel network, we are hearing that as soon as the Dussehra, Diwali, the festive season onset, post that, a very good number of wedding dates, which will enable the business to drive on a very stronger growth. And similar is a story when we are hearing even in the export market. If you look at it, we are also a big garment exporter. We are seeing good opportunity as the recent challenges faced in the Bangladesh market. We have got some customers coming on our way and saying that we want to shift some of the Bangladesh productions to you guys in India. And I think these are both very well and firing well. As far as the real estate is concerned, I'm sure you would have seen that we have already done exceedingly well in the Thane land bank, and we continue to get new projects in the JDS side and outside of Thane and Mumbai, which is also progressing very well. We are very good in terms of the response from the customers, as we have sold more than 50-55% of the inventory which we launched in the Bandra, which is outside of Thane, in the first 45 to 50 days of the launch. So that is again very interesting. And the third piece of the business, which is our engineering business, which is in the auto components as well as aerospace defense, is again doing extremely well, as we see the aerospace defense business is continuing to grow at a minimum of 20-25% a year-on-year basis. So overall, as we have already told, that all our businesses across the group, we are a net debt free, poised for a free good growth, considering that businesses have a free cash flow.
Okay, all right. Amit, welcome to the show. So important update coming in there, where you are going to relist your lifestyle business in the next 2 to 3 weeks. So that is something that we can expect from your company. Just wanted, some more details with regards to, is my voice reaching you?
Mr. Agarwal,
Amit,
can you hear me?
is my voice reaching you? Okay, we'll just reconnect Raymond and the management from the sidelines of the Motilal conference. But important updates which have come in from them, where they are relisting their lifestyle business in the next 2 to 3 odd weeks. They are seeing some amount of traction coming in from Bangladesh. So maybe the textile business could probably benefit for them in terms of, the disruptions which have taken place in Bangladesh. So customers are probably inquiring a little more. In fact, we do have Amit back with us. Amit, if you could just give us an update with regards to this incremental business that you're seeing from Bangladesh at this point in time. How much have you seen in terms of business coming through? Is it just inquiries at this point in time? If so, how much has it risen? How much do you think it'll probably turn into when it comes to tangible business, and by when?
So look, the Bangladesh was exporting roughly $50 billion worth of garments, and in the sector which we operate, it was more in the range of $8 to $10 billion. And we were supplying the fabrics which were getting garmented, made the apparels and sent exported out. So I think the first bit is that what we were exporting, the fabrics which were getting converted into garments, that is the first piece which we expect to come. But at this stage, any garmenting facility would not happen from today to tomorrow. It is a process, because they want to go through this whole process, how the shift can be made, because there is always a WIP with these guys. So over the next 6 to 8 months, we would see. But I think very clearly we are seeing an opportunity that from our 1100 odd crore of garmenting business, somewhere in the range of 7 to 10% of that business, 80 to 100 crore can be shifted from a garment export out of Bangladesh, can come easily to us.
All right. The other part on the real estate business itself, you said that 50 to 55% of your Thane inventory has been sold. Could you give us a sense of what is the current unsold inventory in terms of value that you're sitting on? By when do you realize that? And what are the other projects in the pipeline?
Yeah, so if you look at it, our Thane, we have a land bank of 100 acres. And in that 100 acres, 40 acres is under construction as we speak, which is approximately 9,000 crores. And of which, as I said, around 4,500-5,000 crore worth of inventory we have sold, and balance 4,000 crore of inventory will be sold over the next 3 years. But the remaining 60 acre would deliver another 7 million square feet, which is almost 16 to 18,000 crores. So overall, we believe that the full potential of 25-27,000 crore of Thane land would be realized over 7-8 years. However, since we have signed 5 JDA projects, which is outside of Thane, of around 5 to 6,000 crores, which is also in the process, one JDA project in Bandra we have already launched, and over the next 12 months, we would be launching another 2 to 3 JDA projects. So I think broadly you can consider our real estate business in the next 3 to 4 years would have easily a pre-sales booking of almost 4,000 odd crores, roughly 50% from Thane and 50% from non-Thane. And that should be able to drive the business there after 15 to 20% year after year in that kind of a range.
Okay, all right. You also mentioned that your aerospace, segment is seeing around a 20 to 25% growth, the aerospace and defense segment. You're also demerging both of these segments. I understand the auto and the aerospace segment. Can you tell us what is the order book looking like specifically for defense and aerospace, and what can we expect going forward in terms of execution? You mentioned 20 to 25% growth. Is that sustainable through not only FY25 but FY26?
Yeah, absolutely. So if I look at it, the aerospace defense, the 24 was growing in the range of 270 odd crore business. In the next 3 years, we are very confident that we will double this business. So there's a great journey for Indian aerospace defense, and we are into the engine critical components. So therefore, once you are in with a customer, then you are in for a very long period of time, unless until you mess up with the quality, which we are very careful at. So I think that is a unique thing which we have got, that we are into the engine critical components, and for the two largest player in sort of aircrafts which we have, the Boeings as well as the Airbus. So that's a big advantage, and the overall engineering sector, which is Make in India, is doing extremely well. And our auto components business, we supply almost 65-70% export markets and to all the top 15 OEMs globally. So that is also picking up very, very fast. We are investing also money in that area in order to grow our capacities. So overall, our business of engineering is 1,900 crores, which can easily become double itself in the next 5 years.
All right, and final question before we let you go, Amit. The balance sheet saw a fair amount of improvement post the stake sale of the consumer business. As you are investing in newer businesses, if you could give us a sense of where debt would peak out and what are the further deleveraging plans that you have, if at all?
Yeah, sure. No, absolutely. We are today as a group absolutely net debt free. We sit on the cash, and all our businesses are significant cash flow generating business. For example, Lifestyle last year delivered an EBITDA of 1,100 crores and it has no net debt. Even if you see the real estate, on the real estate side also we are sitting with 450 crores of net cash. And because we are in a JDA-led model, we are not buying land, so there is no question of taking debt in terms of, it is a project-specific construction debt which is required for more than 2.5 years, but we are very careful in leverage so that net cash remains positive. Similarly, on the engineering side also, we are putting the capex from the free cash flow generations of that business. So overall, as a group, we are continuing to be a net cash positive, and we are not anticipating any significant amount of debt to be there on the group. As far as Lifestyle business is concerned, which is going to be listed in a short order, I think I want to give you the perspective that in terms of the wedding play, which we are going to see over the next 2 months after, it's a very large business. If I look at it based on the recent reports, that the Indian menswear market in wedding is roughly in the range of 75-80,000 crores. And because there won't be a wedding in this country where a Raymond suit does not get stitched, we have also launched the ethnics. Overall, we have a market share from a retail value of approximately 5% in that segment in the wedding market, which is very important, and we continue to grow because of our distribution reach and the presence across the country. And that will be a very keystone, and being a pure play business will help us to further boost our penetration into the wedding market.
Okay, all right, fair enough. Well, very bullish outlook coming in there, Mr. Amit Agrawal. Thank you very much for joining in and speaking with us. So that's the outlook coming in from Raymond. They're expecting growth coming through in their lifestyle business, which is going to be listed separately in the next 2 to 3 weeks. And besides that, they're quite bullish in terms of the real estate space as well as the defense and aerospace segment. Well, on that note, we need to take a short break, but a lot more on the markets, lots of stocks lined up. Stay tuned. Welcome back. Well, for the markets, it's holding up okay. We have stocks such as Nykaa, which are buzzing today, so up around 10.5% currently for Nykaa. Just want to point out that Aurobindo Pharma is in focus because the warning letter has been uploaded, which was issued to UGR Unit 3 on the US FDA website. So just a couple of important details, which was uploaded last evening. So it just points out to the same issues which were pretty much, pointed out during those in the Form 43, which was issued post the inspection in Jan-Feb earlier this year. So that particular stock is under pressure on account of details of this warning letter now becoming public. But the other stock which is in focus is Mazagon Docs, which is shrugged off turbulence today. The stock, in fact, has snapped a 3-day losing streak after the brokerage firm ICICI Securities issued a note giving it a sell call. In fact, earlier today, we did catch up with Sanjeev Singhal, who's the chairman and MD of the company. Listen in to some key important points.
We have a current order book of around 40,000 crores. Recently, we have added 4,600 crores of a offshore project from ONGC. Last year also, we received fresh orders worth approximately 7,000 crores. So if you look at the order, the number of vessels which we are executing today, we have orders for around 30 ships which are to be delivered over next couple of years. It is an order for P75I submarines with AIP fitted, where MDL is participating along with TKMS Germany. As per the reports available with us, the field evaluation trials of Mazagon Dock Shipbuilders and TKMS have been found to be successful. And this project also would be progressing at a desired pace. So maybe next year we can expect positive developments on this account. We are out of 4 destroyers, we have already delivered 3, and we are scheduled to deliver the 4th one also this year. So this project would be closing. So any cushions which are kept with respect to liabilities that may arise. We are a cash surplus company. There are no working capital concerns, and there are no liabilities in the form of debts or any loans. So with respect to the investments also, there is a sizable accrual in the form of interest income. And as far as the projects are concerned, projects may reasonable margin would be something around 10 to 12%. And taking the repair verticals, the offshore projects, which we have now started in a significant manner, without assigning any numbers, I would say that anything about 10%, 12% would be a reasonably healthy margin.
All right, so interesting move out there on Mazagon Dock, up around 5% after a big cut that we saw yesterday.
Yes, I just, want to point out that I'm going through the warning letter, and I just want to point out one particular thing which is spoken about by the US FDA, and maybe we can pull up the Aurobindo stock again, where the US FDA has said that quality system does not adequately ensure accuracy and integrity of data to support the safety, effectiveness and quality of the drugs. So I think that's probably what is breaking the camel's back at this point in time in terms of the stock, because if you do mention data integrity in so many words within a US FDA warning letter, then the street is going to assume that the remediation is probably kicked down, kicked down further for Aurobindo, which was confident of a remediation to probably take place in the near term.
All right, interesting. That explains why the stock in an otherwise decent market for the pharmaceutical pack is struggling at the lows of today's trading session so far. Because if you look at all the other pharmaceutical stocks, case in point, something like a Strides Pharma from the broader markets up at the high point of trade. We're seeing some traction in names like Ipca Labs as well as Alembic Pharma as well, both of them sitting with gains of about 2.5 to 3% as well. Take a short break, come back, focus on the markets, get you some trading ideas with Pritesh Mehta of Yes Securities on the other side. Welcome back. You're watching us here on Halftime Report. The market is consolidating right now. Even if you look at the Nifty, the Sensex, as well as the broader markets, The Nifty is just about 33 points in the green right now. The Nifty bank is the one which is pressurizing it a little bit. And the broader market, the health of the broader market's actually been in very good shape over the last couple of trading sessions, with the market breadth being much in favor of advances than the number of stocks which are declining. Why is the Nifty bank in focus? Just look at the 50,754 mark, which is the 20-day moving average on the Nifty bank. It crossed that, closed above that in yesterday's session, but come today, it fell again, once again below that 20-day moving average itself. And it's an important index to track in the second half of trade, largely because it's the weekly options expiry on the Nifty bank as well. And to that extent, 50,550 is where the Nifty bank is at right now. 50,600 call, fairly active with a premium of almost 100 rupees, telling you 50,700 thereabouts. As we move towards the 20-day moving average, there could be a lot of resistance. At the lower level, though, there is support around 50,400. Why do I say that? Because the 50,500 put has seen a writing of almost 61 lakh shares in open interest, with about 100 rupees available for premium. What about the Nifty? Because it's consolidating, people are tempted to write straddles, which is both a call and a put together. What is the straddle all about? It's 24,700, which is being used as a fulcrum for expiry tomorrow. So 50 rupees available on 24,700 put. The 24,700 call comes up for you as well. That has around 85 rupees available. So together, it's about 150 rupees between the 24,700 call and put, telling you that at lower levels, there would be support close to around 24,550, and at the higher level, some sort of resistance above 24,850 itself. A lot of long positions added in a couple of names. Ipca Labs, we spoke about that. Fair amount of open interest build up on the long side. Muthoot Finance is the other one. Remember, gold prices are at near record high, so maybe gold financiers also being bid up in trade today.
Okay, all right. Thanks very much for that, Manglam. Well, we do have Pritesh Mehta joining in to tell us what he's tracking today. Pritesh, well, it's turning out to be a day where we are seeing consolidation, but, the Bank Nifty is a bit nervous today, and it's been off and on this entire week. So how would you approach the Bank Nifty in specific, and a couple of these stocks which are under pressure as well within the banking space?
So see, we tend to be fixated with benchmark index or even Bank Nifty, but real action is taking place in broader markets, with mid cap and small cap 100 indices whiskers away from its previous peak. I think this is the space which is buzzing right now, and this should be a focus of attention. As far as bank is concerned, couple of days back we did a very extensive studies. In fact, the ratio of Bank Nifty versus the leading sectors of the last couple of months, that is auto, IT, realty, the ratio studies tells us that Bank Nifty has been a big laggard compared to these outperformers, but now it is reversing. So the way I look at it, Bank Nifty is now trying to make a comeback. Yes, it is down in today's trading session, but I think it's a matter of time. The Bank Nifty goes towards 50 to 500, and in fact more higher also. So I think Bank Nifty is the one which we need to focus on, at least if you have a longer term perspective. Something like HDFC Bank, Bank of Baroda, they are the one which is throwing buying opportunities. When I talk about these stocks, I'm expecting 20% upside each in both these counters.
Okay, and what about stocks in specific today?
See, since it's all about mid caps, we need to talk about something like BBTC, Bombay Burma. This kind of stock we don't talk often about, but the way I look at the chart formation, we are witnessing series of bullish anchor column and then follow through moves coming in. So I would say buy BBTC for a target of 3,000 and stop at 2350 levels. Second stock that has caught our attention is Persistent Systems. Again, this stock is outperforming our mid cap tier customers index, mid cap tier IT index. And the way I look into it, bullish straight-up breakout is taken place. A target of we can see a target of 6,000. Stop loss would be around 4600.
All right. Pritesh, thank you so much for joining in and giving us your views on individual stocks as well as the index. Take a short break, come back. We'll connect with Rajiv Juneja, who's Vice Chairman and MD of Mankind Pharma. He joins in to discuss their business outlook and, more importantly, the BSV deal.
Welcome back. Well, from the sidelines of the Motilal Oswal 20th Annual Global Investor Conference, I caught up with Rajiv Juneja, who's the Vice Chairman and MD of Mankind Pharma. and began by asking him about the recent BSV deal that they've struck and how exactly is it going to be funded. Listen in.
This work is in progress. Things will happen by the end of November, hopefully, once we sign this, the complete deal. But hopefully, 4,000 crore rupees would come from internal accrual and rest 70-30. And also, we have some non-core business that we would be putting on the block. So some kind of money would come from that business as well.
Okay. Can you just tell us
So let's see what happens going forward. That's a rough idea.
All right, that's a rough idea, but
basically is this only that
sure. But what are these non-core businesses? Can you just throw some light in terms of what are we talking about? A segment of the company? Are we talking about certain products?
No. Not the products. We have some property by the name of Western. This basically initially was a training center, and later on it was given to this Western group of hotels, and they were running it. This particular property will come on the block, and we will offload that.
Okay, but is it under
Not the company. Every product in mankind, every company in mankind, every product in mankind is in core business. Hospitality side, we have some one hotel, two hotels, one big hotel, one small hotel that would be sold off.
Where are they located, and how much do you expect to garner?
These are under the mankind's properties.
Okay.
One in Rishikesh, one is in some place in Gurgaon.
Okay, so you'd probably look to sell both of them, and how much would you garner?
Hopefully, 600-700 crore rupees from these two properties, and that really shows our kind of a confidence in our new acquired company.
Okay, and by when?
Let's see when it happens, when we get the right value. We are not in a hurry. By the end of November, let's hope that this deal gets finalized, and next couple of more months till we get the right value for these properties. We are not in a hurry to really offload these properties.
Okay. All right. So, what component will then reduce in terms of what you would be taking on? Would you be taking on less debt, or would it be less equity?
We said in the starting only that, say for example, out of say approximately this is a deal of 14,000 crore rupees. Out of that, 4,000 would go from the company side. Because we would be having this much cash in our books. 7,000 approximately again would come from the debt side, and 3,000 from QIP. I don't know this will become 2,500 QIP or 3,000. The time will tell only.
Okay. When can we expect this QIP to take place by?
Once we close this deal, and let's see in December, January, hopefully.
Okay,
because
all right.
nothing can be done before we sign the final agreement.
Your India prescription sales in this quarter were up around close to 10%. It outperformed the India pharma market again. What are you guiding for the entire year?
The guidance has been given. It's around 15% as a whole. Never forget that 37% sales come from the chronic side. We are still a acute heavy company. In the last couple of years, our chronic share has increased from 28% in 2018 to 37% now. So we are continuously increasing that. Plus, there's always a seasonality which plays a role. Rain is also, sometimes it comes in early, sometimes late. Let's see what happens in future, but we are very, very confident that whatever guidance has been given would be done. We always say that we'll be doing 1.3 to 1.4 times to IPM, and that we still stand.
So this 37% share that you have of sales coming in from chronic, once the BSV acquisition closes, how much would you think that the chronic percentage would rise to, and what is your target as well?
See, BSV should be seen not from a pharma lenses. It's a super specialty kind of a business. So it's in critical care, it is in fertility side. These are some of the products. BSV offers some of the products which are very unique in nature. Anti-D, which is their hero product. The patent is there till December 28. Thymogam, it's only one brand. Their snake venom, snake bite products, they're also quite unique. So these, you cannot call them only chronic, but these are very unique kind of portfolio, which should be not seen from the lenses of pharma side.
Okay, all right. Well,
high entry barrier, super specialty business.
correct. The consumer healthcare segment, your run rate improved last quarter. It was up 32% on a Q-on-Q basis, but it's still been sluggish year on year. What are we expecting going forward in terms of growth rate there?
This consumer business is closest to our heart because it has given a lot of name to mankind. We said many quarters back, 2-3 quarters back, that we'll hive off this business, make it an independent entity. We have done that. And during this process, we have cleaned up number of things. Earlier, it was being run pharma and consumer mixed way. I'll give you some example. Earlier, it was being run on 6,500 distributors. And now it is running like just a consumer division with only 1,900 distributors. We hope that we'll be getting double-digit growth and high-teen profits from this company, this particular division.
Your export segment did very well last quarter. It was up 62% year on year, but it's still a small part of your overall business. How much importance are you giving your export segment going forward, and will this kind of high growth continue in the coming quarters as well?
We always said that in export side, we will just give focus on certain things. We'll export difficult to make products, complex products where entry barriers are there. Vanilla, tablet, capsule syrups will not be exported by mankind. We hope that going forward we'll have a double-digit growth. Earlier, because the base was smaller, so the growth was quite big. But again, we are a India-focused company, domestic company. The focus would always remain towards India side. Only in the case of some opportunities where we can command profits and respect for a longer period, we'll go for export side.
Okay. All right. And, just wanted your view on the margins. On BSV, you all have indicated that eventually you all will probably hit margins of around 30% versus that 28% which was adjusted. By when do you see that taking place?
See, this year will be gone by the time we'll take BSV, so we can talk about the next year. We hope next year, if right now the margins are 28%, if we take off one-offs, going forward we hope that 100 to 200 basis points increment would be there each year, next year onwards on BSV margins.
Okay, and as
so 28-30% next year we can expect it.
Okay, and as a consolidated entity for Mankind, you're expecting 25 to 26% in FY25.
Correct.
Welcome back. Some of the stocks are actually taking your breath away. They belong to the non-ferrous metal space. So Hindalco is among the top Nifty gainers right now, has moved to the high point of trade. Again, you have some other non-ferrous names like Nalco, which has moved to the high point. Again, Nalco entered the F&O band. Despite that, it's continuously moving higher. And Vedanta, just look at Vedanta. Through the intraday chart that you see, most of today, it was absolutely flat. And thereafter, just the last 15 minutes or so, it's a big up move that we've seen on Vedanta itself. Then the consumer discretionary names continue to do well. Jubilant Foodworks has moved to the high point of trade. Restaurant Brands Asia, the one that operates Burger King restaurants across the country, has also seen a spike of nearly 6 to 7%. And Nykaa, a stock that Ekta pointed out earlier, has now extended its gain beyond that 10% mark to about 12%. So just keep an eye out on all these stocks. Even as the frontline indices are consolidating, the broader markets are abuzz. Take a short break, come back, focus on the commodity space. Manisha Gupta, as always, joins in.
Joining us on the show now is Sabyasachi Ray. He's Executive Director at Gem & Jewelry Export Promotion Council. Mr. Ray, hi, thank you so much for joining us. And let's start with the good news first. And the recently gone IIJS Premier 2024 was a record success. We've seen very strong numbers. What is it that you have to share with us in sense of numbers on that one?
See, Manisha, as you have followed the show for the last few years, you have seen the enthusiasm for this show is something which takes it apart from all other events, what happens into the sector. So this year also we have seen huge enthusiasm. In fact, the enthusiasm was helped by the recent announcement of our finance minister in the union budget, where the import duty on gold was decreased to 6%. And that was a huge enthusiasm, because what we understand at the consumer level, there was a good demand. And based on that, in the B2B level also, there was good demand. But before this announcement also, we have seen the enthusiasm for IIJS for participants. This year, we have more than 2,100 participants, and it was spaced down in 3,600 booths. In fact, the requirement was 5,000 booths, but it went up, or we could not give the space after taking both the venues for NESCO and Geo. I think that we are maybe the only show now in Bombay which happens in both the venues. The total area coverage is more than 1 million square feet, which is one of the largest maybe in India also. And we are now the second largest B2B show in the world. And if it continues like this, we are very hopeful by the next 1 or 2 years will be the largest. Like every sector in India, we are growing at a very robust pace. And this year we have seen around 50,000 visitors who has come from more than 800 cities. And also we have seen visitors who have come from more than 60 countries, 67 countries to be precise, and 800 cities in India who has come to visit this show and do their business into this show. So overall also we have seen a large number of MSMEs also. The number of MSMEs has gone up by more than 20%. So that in itself also has helped the show to grow to this amount. But also the environment of the show in terms of logistics, in terms of the venue movement between the shows, everything has shown a huge amount of growth. So that way we are hopeful, because...
And this is...
Yes.
And this is ahead of the festival season, so it absolutely does mark a very strong one, especially for the domestic markets. But let's talk about the international markets now, and those numbers have not been very supportive. For the month of July as well, the latest data that has come in from you shows that all jewelry categories, almost all, have seen a decline. Even cut and polished diamond numbers have been on the weaker side. What is it that continues to bother the industry, as we can see via the numbers, and when do you see some improvement coming in for these?
Manisha, one of the things, as you know, that what we are facing right now is in diamonds, which contributes more than 50% of the total portfolio of Indian exports, is facing some rough weather. As we have already told, that the main thing what we are facing is the Chinese demand. What we understand is that the demand of diamonds in China, which contributes to around some 25% of the total world demand of diamond jewelry, is not coming back the way we had wanted. And also what has happened, in the US, of course, what we have understood based on what they faced initially in terms of, their some sort of slowdown and etc. What they initially faced, because of that a lot of inventory has piled up in US. I think this will take a bit of a time to move out. And what we can see is that at least this year till March we'll face this type of headwinds. And the main problem what in diamond is happening is the slowdown in demand into the consumer market. And that slowdown in demand, as a council and as all the other components in the world, the miners and all the people, also the retailers, all of us, what we are trying is to, see that the demand gets revived. But this is for every other commodity, how it faces, this cycle. Of course, we have faced this kind of thing in 2008 and etc. And we are very hopeful that by the end of, let's say, this year or maybe by 2025, March, April onwards, we can see an uptick in demand because we have lined up a lot of activities along with different world bodies, and we are up into it. And in fact, in terms of looking at how the things will be managed to uptick in demand. If you're talking about jewelry, of course, the last. Yes.
Yeah, I just wanted to, there's a shortage of time, but I do wanted to understand that there also is, because of all of this, we've also seen decline in prices of diamond. Is that yet another thing that is hurting the industry?
See, Manisha, one of the things what we have again analyzed with the analyst, one of the analysts has already given a presentation during our exhibition. We have not seen the decrease in the prices of diamonds. One of the things we need to understand is that the price has this uptick and, but the average prices of diamond throughout the last few years has not gone down. So this is one of the issues what we are all hearing everywhere, that the diamond. But if you have understood that just after COVID, the price of diamonds have gone up highly, there may be some price correction from that level. So post-COVID, you have also reported, if you can look into your previous report, the prices have gone up by more than 20-30%. There may be some correction, but average over the years, the price of diamonds have not gone down. That is one big notion, because in the short term, what we understand, everywhere it gets reported and it gets, of course, a lot of traction.
It does. Mr. Ray, thank you so much for joining us and answering all of those questions there. So, of course, going forward with the festival season here and the season in the international markets as well, the numbers are anticipated to be on the stronger side. But with that, that's all the time that we have on the show. Thank you for watching. Business Lunch will take all the action ahead.